All right. Hello, everybody. Drew, aka Catching Rockets here. Gonna do a quick video today. I was talking with somebody in one of the discords I'm in, and they had questions about how I enter my trades as far as taking triggers from things that I post, and also asked me about the skinny belly that I talk about. So I'm going to cover both of those things really quickly. Hopefully, give some insight. So today we're going to be looking at CVX, which was a play that I posted on Tuesday. Didn't play out on Wednesday, but it played out today, and it played out really well. So you can see I have bullish full send on the 1 year, 1 day chart. This will be a day trade as earnings are on 429. Over 157.18, take 429, 165 calls. Skinny belly, so right there. Skinny belly from about 160.5 to 164. So the first thing we have to worry about is this 157.18 here. So we're going to go onto our charts, and we're going to put a line for our entry on our charts. So 157.18. So right here. And then what I do is I type in go long, and I change the color to green. Green for calls and red for puts. If this was for puts, I would type in short here. But whatever you type, it doesn't matter, just as long as you understand what it means. Oh, shoot. I don't change the color of the text. I change the color of the line. So there we go. Go long over 157.18. So on the next trading day, basically, let me resize this so we can actually see. We opened, below our trigger, which, we opened above our trigger. If you open above the trigger, you completely ignore the trade, unless you pull back down below the trigger and come back up and retest it. So in this instance, when you open up here, you're not hopping in the trade. When we see this pullback, and then we cross above the trigger here. So as soon as this candle goes above this line, you push buy on your calls that you should already have queued up, like ready to go, getting into this trade. So you can see this played out, basically almost 1 point from our trigger up, and then we came back down and retested again. I'm sure people have, like, if you watch my video, you've probably heard me say the retest is pretty much always the biggest move. Sometimes we don't get a retest. So depending on what type of trader you are, I'm pretty aggressive. So I'm happy to hop in the calls here. And when I start to see all these wicks at the top, I'm happy to jump out, somewhere around here, and make my money off of that point move. When we come back down and retest here, this was a few cents off of our trigger. Oh, shoot, wrong line, or wrong thing. When we come back and retest right here, we're just a few cents from the trigger. And this comes down to like an experience thing, but so the low on that candle was 157.21. So we're 3 cents away from our trigger. I'm more than happy to hop back into calls there. Especially when I see, this big wick on the bottom of this candle. The next candle's indecision, and then I have a green candle here. I might wait for this green candle to hop back in, but I'm happy to hop back in on one of these 3 candles when I retest the trigger here, and then play this to the upside. So this ended up running for well over 200% today. And if you've been paying attention to the full sends, that's not unusual. Not unusual to get big moves like that on full sends, which is why I share them with everybody. And they're also easy for me to share because it's easy to find. It's easy for me to give like a price level to enter. Whereas like my normal trades, when I'm trading during the day, I'll draw out like a bull flag like this. I draw my fibs. I mean, I've taught how to do this, but every time a candle touches the top of this flag, my entry moves. So like my entry was here at one point. Then my entry moved to the next touch here. And then finally my entry moved to this touch here. And so for me to keep like trying to alert in a Discord or whatever, like over this price, take calls on a flag where the entry price keeps moving, it's too much. So I don't really alert those plays, like the scalps trades that I do during the day. In that sense, unless like I'm in a voice chat where I can just talk and say, oh, calls over this price. Oh, wait, the price, the entries moved to here. I won't really call these out very much. Sometimes I will post charts, and then basically when I do that, I'm giving people the opportunity to find their own trigger to take the trade, just helping them recognize, the pattern on the screen. So then the other thing we're going to talk about, and this video is almost done, is the skinny belly aspect of this. So we'll go to the 1 hour chart to look at this. And we're going to be looking at, you can find this in TradingView. A lot of other, sorry, just lost my train of thought. A lot of other trading platforms have this feature, but we're going to be using VPRV, which is it's the volume profile visible range. So basically what that means is what it can see on the chart, like the candlesticks that it can see, it will draw a volume profile for. So if I zoom in, the volume, like the volume profile changes based upon the candles that it can see. But so from here, let me make this bigger. So I've taught volume profile, and you can see basically, I'll just cover it again, but I have a full video that's literally on volume profile in my, excuse me, in my playlist, where I go more in depth on volume profile. But basically volume profile, these are called volume shelves, where we have volume that sticks out like this. And the way that you want to think of volume shelves is like steps on a stair or like rungs on a ladder, where as long as you have a stair, you can stop, like you could stand here, which means like this stock, it can trade sideways here because it has something to stand on to support it. But from here to here, there's nothing to support it. So we're going to go straight up or straight down. Once we get back to this, like if we get up to this shelf, again, we can go sideways here like we did over here. We're able to hang out in this area because we have this big volume shelf to stand on to support us, okay? Up here, we have another volume shelf, so we're able to hang out up here. But basically, wherever you see like a skinny belly like this, that's what this is called, where you have like an area that goes skinnier from shelf to shelf. As you can see, the stock price can fly through it. So here we flew up through it. We gapped down and flew back through it down to this shelf again, right? And then we gapped up and flew through it again. Once we got up here, We formed a new shelf up here. We had something to support us, to stand on. But once we crossed below it, just ripped down. And then here again, a skinny belly, we gapped down and started consolidating again. So basically when I recognized that this was looking bullish and there's a skinny belly here, I was pretty confident we would fly from here to right about where we did. I actually thought we would probably reject right around 161.60 or possibly 163.12 and possibly 163.81. But those are the three like key levels I was looking at. It doesn't really matter. Once you're up 200 some odd percent, you just take profit at that point. Like, who cares exactly where it's going to reject? Anyway, that's going to do it for the video. Once again, if you're not subbed, please give me a sub. I would appreciate it. Comments and likes, of course, keep me going. If you don't have a platform to trade on, down below in the description, I recommend TOS if you're trading on a desktop. If you're not, if you're trading on mobile, I recommend Webull. If you use my referral link, I would really appreciate it. Anyway, much love, everybody. Have a good day. Take care.